I bet you're wondering which home loan is best when you're purchasing a home. That's why you found me today, and I'm glad that you have. That's what we're discussing in today's video. I have a lot of good information on this, and it really boils down to a lot of things. So let's jump into the scoop so we can find out what's right for you. Weeks. I've been doing loans for 18 years. If you're new to the channel, welcome and thank you. If you're returning, thank you as well. I want to be your loan officer. If you're in Louisiana, Mississippi, Alabama, or Florida, I can help you with your home financing. 985-300-LOAN. Give me a call, shoot me a text, or send me an email. Whether you're moving in 9 days or 90 days, I am here to help. If you're in the other states, I can't help you with your loan, but I can help you with great education. I'm going to do a quick little plug because I built a first-time home buyer's massive mortgage education course that I usually charge $597 for, and I'm going to drop a link below for all of you to purchase it at $97. Words can't express. It's almost like growing a baby and having a baby. This course has been so much fun, and so much passion and so much dedication has gone into this to not only help you get a great loan approval, a great pre-approval, but also help you with a smooth and on-time closing. So enough of that. Which home loan is best for purchasing a home? That depends. So do you have a pen and paper? Because if you don't, you're gonna want to grab one because you're gonna wanna make some notes. We're gonna talk about what your goals are. That makes all the difference in the world. So, number one, what is your goal for this house as far as how long do you think that you might live there? Are you buying this house to live there for 30 years, to live there for 15? Are you buying this house because it's a step up and you only plan to live there 3 to 5 years? Are you buying this house to live there for a year and then convert it into maybe a rental property? Depending upon your answer to that, my answer to you is going to be different in every situation. My first opinion would be, let's talk about a VA loan. If you're not a veteran, still hang in there. I've got a lot of good information coming. For our veterans, first of all, thank you so much for your service. With a VA loan, and depending upon your eligibility, you might qualify for a 100% loan with no down payment. Now, you pair that with the seller covering your closing costs and prepaids, and you could buy a home with basically nothing out of pocket. So little out of pocket, depending upon your area. Now, VA does allow for you to buy the home and live in it, but convert it to a rental at a later date. You don't have to promise to live there forever. You have to have the intent on moving in within 60 days and occupying it for at least a year. Now, I would think that if you're a veteran and you have any other debt besides a potential home loan, that you would want to utilize the 100% financing and maybe take the money that you do have and you thought about using for down payment and pay off some of your other debt that's probably not tax deductible debt when a mortgage is. That's probably a much higher payment. What do I mean by that? Let's say you have a $10,000 auto loan and that loan is $400 a month. Well, that same $10,000 down on a house, that's going to save you 50, 60, I don't know, $70 a month maybe if you're lucky, over a 30-year loan. Would you rather spend $10,000 and save $60 a month, or would you rather spend $10,000 and save $400 a month? That's what I mean in that example. If you're new to the channel, don't forget to hit the subscribe button and the bell to be notified every time I drop a new video each week on anything and everything mortgage education. Remember, I want to be your loan officer. Whether you're moving in 9 days or 90 days, give me a call, shoot me a text, or send me an email. 985-300-LOAN. I can help you in Louisiana, Mississippi, Alabama, or Florida. Enough of that. All right, next option. I'm going to give some similar suggestions if you're qualified to go rural development. Again, depending upon how long you plan on living in the house versus keeping the property versus selling the property, whether it's long-term or whether it's short-term is going to depend for you on which loan might be the best. RD, or rural development, has income limits, but they're really, I think they're high. You can make a really great living and still be below that limit. And it is available in only certain areas, certain demographic areas or geographical areas, that's the word. So you have to make sure you're looking in an area that does qualify for that, and then you have to qualify for that as well once you're in the area that is covered. So with that particular loan, again, if you've got money to put down, but you've got other debt besides that potential home loan, then you might want to take advantage of that 100% financing and pay off that other debt and put yourself in a better situation. Now, a lot of people don't have the down payment and a lot of people don't have the closing cost. Similarly, as I mentioned with VA, if you're doing an RD loan and you can do the 100% financing and pair that with the seller paying your closing cost and prepaid items for you, then you could potentially come up with next to nothing and buy a home loan. Now, RD's a little bit different. Although they do want you to occupy within 60 days and promise to live there for at least a year, it's a little bit harder to refinance at a later date if you are no longer living in the property. And it may even be impossible to refinance if you're no longer living in the property. So you have to talk to your loan officer about that or call me about your specific situation. However, if you plan to live there and use it as your primary residence, it could be a great option for you and might be a great loan for you, whether it's long-term or a short-term house, because you're not coming up with a lot of cash. It's still a really great interest rate, even if you have an average credit score. And there is mortgage insurance, but it's not super expensive. So that could be an option for you as a short-term option or a long-term option. Now, don't get me wrong, okay? If you've got excellent credit and 20% down, which most people don't, you want to do that all day, and that's a better loan on a conventional loan for long term, right? But that's not most people's situation. So let's talk about now FHA, and we'll touch on that for a moment. It's not 100% financing like VA or RD. It does require a minimum 3.5% down. Here's the good news. VA, RD, and FHA, you can have a below average credit score, not have a lot of money, and still get a home loan. In those regards, to me, that means home loans are quite freaking easy to get still. Now, you have overdraft, you have NSF, you can't track how you pay your bills for rent, things like that. You have too much debt. Those things will cause you to not qualify. And that's why you want to get pre-approved with the lender before shopping for a home and before getting with real estate agent. Now with the FHA loan, you're going to put down 3.5%, and with each of these loans I'm mentioning, you're also going to have closing costs, you're also going to have prepaid items. What are closing costs? Lender, appraiser, title company, clerk of court. What are they? Well, that depends on your area, and it also depends on your loan type and your loan term and things like that. If I was going to give you something, a really just generic range to go by, probably $4,000 to $6,000. Yes, it's a lot of money and it can add up pretty quickly. And that's not even including other things like points. If you want to know about points, reference one of my other videos so I can tell you all about should you buy points or not. Anyway, then you've got your prepaid items. That's your home insurance and property taxes prepaid to set up your escrow account. Oh my gosh, what's an escrow account? Well, we'll get into that in another video because I want to stay on focus for this particular one. With FHA, if you get the seller to help with closing costs and prepaids, you could come up with as little as 3.5% down, plus whatever the seller's not covering for you for those thousands of dollars. FHA is not my favorite loan long term if you plan to live in the house for a really long time and not to convert it to a rental. Now, don't get me wrong, FHA has its place and it's a great loan that offers opportunity for home buyers that might not otherwise be approved with these other programs. And for that, thanks to FHA. But if you're considering it for really long term, it might not be the best loan but it might be what you have to do to get into a house, and then you might have to consider refinancing later, maybe once you have better credit, or once you have more down payment, or once you have more equity potentially. So we've talked about VA, we've talked about RD, and we've talked about FHA. Now it's time to talk about conventional. I didn't save this for last because it's necessarily the best. I saved it for last because a lot of times people don't go this route. Conventional is for people that have at least 3% down. You can do 3% down, 5% down, or however much more that you would like to do on top of that. And it limits more than the limitations on the other loan types of how much the seller can help you with closing costs, which means most of the time on conventional, you're not just coming up with that down payment and a little bit of overage. You're typically coming up with that 3 or 5% down payment plus a few thousand more, because the seller, even if they're willing, will have some limitations on what they can pay for you for closing costs and prepaids. Now, when it comes to conventional and it comes to long-term or short-term, I'm not going to bore you with so many details on mortgage insurance, but there's a lot of options on mortgage insurance that you don't have on some of these other programs. So depending upon whether you're looking long-term or short-term, I might recommend single mortgage insurance versus lender paid versus monthly. Monthly is what everyone is typically used to and is typically heard of as the monthly PMI. When it comes to a long-term investment, you can still get a good rate with an average credit score, although you're going to get a much better interest rate with a great credit score. Those other programs are government-backed programs, and they are much more flexible on that credit score than a conventional loan is going to be. And on a positive note, with the conventional loan, the mortgage insurance is not for the life of the loan. And when you put down 20%, you don't have mortgage insurance at all. So long-term conventional could possibly be the best option for you when you're purchasing a house. Here's the thing, and this is what's difficult about my job, is what's the answer? And it's so case by case, it's very impossible without talking to a lender that can best advise you. And that's why you want to go with a really good loan officer. I say it's like a marriage and like therapy. You need to be direct. You need to not hold anything back. You've got to tell me anything and everything. That way I can help best advise you. Because depending upon your situation, your credit score is a big one. What you qualify for, what type of loan you qualify for is a big one. How long you're going to keep that house is a big one. Whether you're converting it to a rental later is a big one. Case by case, getting with a good loan officer will help you determine for you specifically what is the best home loan when purchasing a home. I hope this video has been helpful today. I love your comments. I welcome your comments. And again, I want to be your loan officer. 985-300-LOAN if you're in Louisiana, Mississippi, Alabama, or Florida. Have a super day, and thanks for tuning in. See you in the next one. If you're new to the channel, thank you and welcome. Please be sure to subscribe, hit the like button if you're enjoying the content, and don't forget to hit the bell to be notified every time I drop a new video, which is every week.